We talked about it actually last time we were on the show about, listen, inflation is not accelerating of any significant magnitude. In fact, we're going to get core PCE, which is the Fed's favorite metric tomorrow. We think it's going to drop to 183. You're still not at the Fed's inflation target. The 3-month core CPI ran at 157. The same reading October last year was 2.25. The data, the interest-sensitive parts of the economy, all report on housing. The housing data is soft. Some of the small business is soft. So yeah, I think the Fed is starting very slowly, and I think they'll lay it out. Be interesting to see what Chair Powell says today. But I think at the December meeting, they're going to start to talk about what's happening to residential. They'll start talking about, gosh, we've moved. In December, it'll be 10 times. Why not step back and look at what the data is from here? Because the data is slowing.
And we now know, I was glad to hear that guts are more important than brains, because we're both good on the gut side.
Yes,
but what is your gut telling you next year? How many hikes? One, two, three, or four?
So I'm low. I mean, I have a different view. So I think they're going to go in December.
Yeah.
And then I think they're going to be very data centric, and I think you're going to go.
Could be zero?
They could be zero. I think the base case I think is you go 1 to 2 times. That's it. So meaning that most of the rate adjustment that people have called for is, or what's priced in the market today, it's happened.
So what's the market's problem? The market acts like they've already overshot. Or were they is the market looking at terminal pricing and looking at 4 next year, and that's too much? Because we're not at neutral already, are we?
So I'm getting in this debate before of officials there and otherwise. If you take the interest-sensitive parts of the economy, they are breaking quite markedly. I mean, housing, small business, you see in the autos.
Autos, what we're seeing from GM.
Totally.
Yeah.
So are we at neutral? You could debate that we're there today. Will the Fed go 1 or 2 more times to get it closer to 3%? I think that's right. But boy, I think we're pretty darn close today. And you could make an argument how much your home builder stock's down. That is a reflection of the fact that housing affordability is tight today. It's a really big deal. So listen, I think growth is slowing. I think we're going to go to 2% GDP next year. By the way, that's pretty good. That's what the normal run rate is on GDP. We've just been running.
Did you watch oil and think, what the heck? Or do you just write it off the supply? Did it scare you?
That sort of move, when you were trending to what looked like $100 a barrel, that sort of move when you have to think about global demand is, and the rest of the world is slowing markedly.
Can I just say,
China's slowing.
So was it global demand or not?
So clearly demand is down, but supply is the primary driver.
60-40, 70-30, what?
Oh, it's hard to say. Is it 60, 70% supply, something like that?
But 2% is unacceptable based on the politics and the math of our own balance sheet as a country, right? I mean that's the other piece of this. To make the math work of the tax cuts and everything else that has gone into this over the past year and a half, 2% may seem fine by historical standards, but it's not fine based on what we've just done.
The debt's too big. The reason why rates can still move moderately higher, I think most of the big move is done, is the debt's too big. You're right. We have to pay down a significant amount of debt over the coming years.
And the model was based on this expectation, and I'm not saying I expected it, but the expectation that was put forth by the administration and Congress that somehow...
He was too smart to believe that.
Well,
he wasn't. He's been around.
I don't think most people, by the way, thought it was the case.
Listen, we live in a global economy where you look at potential growth in Europe is 1-ish. In Japan, it's less than that. We are going to grow. I think in this demographic cycle with the debt that's on the system, it's a 2 economy, full stop. You put the amount of fiscal and monetary stimulus we had in this past year, in the past couple of years, can you run at 3.5 for a period of time? You can, but you're going to migrate to 2%. And your point is...
Can you average 2.5? Can we get...
Yeah, yes, and I think we're talking about...
2.5.
But when people we talk about what does the stock market do, we're not going into a deep recession. I would argue we're not going into any recession for an extended period of time, but we are going to come off the boil.
Okay.
Totally.